Well, Dalal Street gains for the 12th straight day, its longest winning streak in over 3 decades. The Nifty and the Sensex gain for the 3rd straight week, its biggest weekly gain in 2 months. Over the next 30 minutes, we decode the week on Dalal Street, put the spotlight on NSE's plans to go public, and we'll tell you all about the big block deals this week. Hello and welcome to the Editors Roundtable. I'm Sonia Shenoy, with me Nimesh Shah and Nigel D'Souza. Also on the show today with us is Devina Mehra, the founder, chairperson and managing director at First Global. Guys, before we go across to Devina, what a week it's been for the market, right? I mean, phenomenal, the kind of run-up. At every point in time, one would have expected a sell-off to come through, but it just didn't. So I think it's been spectacular.
Well, that's right. You know, when you have 5 sessions in a week and all 5 end in the green, that's telling you that, in fact, it was a good day. And, you know, it was a more large-cap driven, so it was good. But I like the point that Nimesh made, actually, towards the end of Friday, when we're expecting the entire MSCI rejig to take place, and we're talking about $5 billion, and the markets end up 50-60 points.
Exactly. So no, that also says that, as you rightly pointed out, Sonia, at the introduction, that we had 12 days of straight gains without any fall. Looks like there is a bit of anticipation of this big MSCI inflow, and that's the reason why market didn't fell in the last 12 sessions, 11 or 12 sessions. So looks like a bit of preemptive was done. Now it will be all about what for the September series. We have this big Fed meet. That can be a big trigger for the markets. In fact, Nigel is going to put a piece as well as to what rate cut means for global and emerging markets. That's an interesting data to watch, actually. But in general, this market is all about liquidity, right? There is so much of domestic liquidity which is helping the markets, especially the bulls, to just carry on and just ride without any fear. So I guess some data needs to be looked at very closely now. Earnings were not that great. We'll have to see how the Fed as and when how much they do. The US elections in November will be quite tricky as well. So a lot of forward future-looking data is suggesting a bit of caution, but who are we to fight the liquidity?
No, actually, there are some ominous signs of a correction in the global markets, right? Yeah. There is talks of a recession in the US. The data that has come out, whether it's the unemployment rate that has gone up, there's stagflation concerns in the US as well. So a correction, global correction is imminent, but the timing of when it happens, no one can tell. But Nigel, you sort of analyze the market through the week. Yeah,
well, that's right. For the time being, the markets want to ignore any kind of bad news and just want to pick up the good news and just move ahead. So the global markets were in blue sky territory. We're back at all-time highs at the start of August. Everyone said, hey, what's going on? Are we going to see that big correction? And the US markets as well corrected. But we picked up from there. And in August itself, we're up more than 4.5%, which is telling you the kind of move that we're seeing. So global markets, well, we're awaiting that Fed rate cut in September itself. Now it's between 25 basis points or 50 basis points. But the street has digested that, yes, we're going to see rate cuts that will come in. Indian markets, well, we make fresh all-time highs. But there are pockets where we are seeing some bit of selling. And now we're on a 12-session winning streak. Geopolitical issues, that's being ignored for now, but that could be something that will come to fore, particularly when we have the US elections that is expected in the next 2 months or so. For me, the Nifty bank not able to conquer that 51,400 mark, that's a bit of a warning sign, because almost every day in this week we went to 51,400, but we couldn't get past that. That's where the 50 DMA is as well. So I think once we get decisively past that, then that's what will give direction, or maybe we break the 20 DMA on the Nifty bank on the downside, which is around 400 points away from current levels. What did well this week? Two opposite ends of the spectrum. Tech did well, we're up 4% over there, and Realty was up close to around 3.5%. Both those two indices, the big outperformers, but the broader markets, a bit of an underperformance. One more point, guys. Everyone's saying we're not seeing a big correction. Everything is at all-time highs. Nvidia, the stock is up 140% in this year itself. From the peak, it's down 16%. Quietly that one's corrected. Defense stocks, HAL,
exactly, correct.
Bharat Dynamics, both of them have corrected big time from the recent peak. So there are, though we are saying that the markets have not corrected, but individual stocks are going through 15, 20, 25% correction as well.
So Nigel, that's exactly the point. This week, it may look good that it's a 12-day of winning streak or whatever. But if for this week particularly, it's the large cap which have done well. The broader market stocks have not done that well. There is some pockets which have done well, but that's again very limited stocks which have done well. So if you ask a portfolio investor, he will not be happy with this week's performance, especially from a portfolio point of view. The Nifty looks great because of, and we've seen this, right? After an all-time high of 25,000, generally we are going to see the large caps to drive this. So we had the big HDFC event that is now out of the way. We had a Reliance event this week, even that is out of the way. Tech has rallied 20-25% from the recent low. So now we need to focus on which sector or which leader in the large cap which can take this rally forward. So I guess that's going to be a big question mark. Maybe one of the sectors to watch could be metals, because again there is a talk of stimulus in China, so that can lead to a bit of a rally in the metal names. But I guess there are not enough levers now, even in the large caps, which can potentially throw up a big surprise. So need to see how it goes.
In fact, I just want to get Devina's view into this. She's been sitting by waiting patiently. Devina, thank you so much for joining us. So, as we were discussing, right, I mean, there are signs and perhaps a correction is overdue as well, but it hasn't come yet. So as an Indian market investor, what do you do now? Do you get cautious? Do you raise your cash levels, or do you continue to ride this rally?
Well, hi and good afternoon to you and your viewers. If you want it in one line, I would say get out of the frothy areas of the market and get into a steadier portfolio. You need not go into cash necessarily, but there have been pockets in the market which all of us know of where there have been excesses, whether it is in market cap categories, whether it is in themes, whether it is in new offerings, whether of stocks or of funds. I would say even some of the NFOs in the areas where they have come up. So those are the areas where you should take some money off the table and put it in a steadier portfolio. That would be my number one advice.
So Devina, when you say steadier portfolio, if you can just tell for our viewers, which are the sectors that you are quite bullish on at this point in time and would like to incrementally add money into those sectors?
In July, we do a quarterly rebalance of our PMS portfolio. So from base zero, where would we be if we had money today, if we had cash today? And so there are some themes which continued. So we have been overweight, for example, in autos and pharma for the past year and a half. In the beginning of 23, we added more there, auto components in particular, more than autos and pharma. Capital goods and industrial machinery, we got in much earlier than most other funds and investors, which is almost 3 years ago. In October 21, we have been cutting and booking profits, but we are still a little overweight. Sector which we were slightly overweight. We went even more overweight in the last rebalance was IT. And a sector which had kind of disappeared from our portfolios for almost 2 years was chemicals, and that made a comeback in our systems. A number of chemical stocks went up high. So that's a sector where we made fresh investments. We remain where we are underweight. We remain underweight banks. But the change of late in the last 2 quarters has been that we moved a little from the PSUs to the private sector. Still underweight, but the relative weights changed. Surprisingly, this time, a lot of the other non-lending financials our systems did not like. For example, stock exchanges or AMCs or broking related stocks. So we just because they fell so much in our rankings, we got out of most of that. So that would be the broad pattern of what we did this time, where we are overweight, where we are underweight. We are quite a bit underweight to things like energy, utilities, and things like that. So that's one more segment.
All right, Devina. Well, I'll tell you what, everyone's talking about this 12 straight winning streak. But the bulls will be hoping that history doesn't repeat itself. Because in the last 12 sessions, the Nifty has ended well in the green, which is great news, right? When was the last time that we had a 12-session winning streak? It was all the way back in November 1993. The markets went up by around 139 points on a base of around 800. And that's why the gains are around 17%. The last time around, we saw 12 straight sessions that we did have gains. This time around, because of the larger base, it's at around 4.5% odd. But I'll tell you what, that's a long time away. So let's figure out, when did we at least see a 11-session winning streak? Well, that was a long, long time away. In fact, it was in 2007 itself. And at that point of time, we had a good run. The markets were up by around 700 points approximately in 11 straight sessions. 3 months later, we were even higher. So after jumping up close to 16%, we built on another 18%. But from then on, things actually went southward. So post that 11-session winning streak, 6 months down the line, we had corrected by 8.5% from there. And 1 year down the line, we corrected close to around 27%. So it's been a good run, 12-session winning streak. The bulls are feeling good, but they are hoping that history doesn't repeat itself, because when we last had an 11-session winning streak, well, a year down the line, things didn't look very, very good. Well, Devina, I wanted your view on this. You know, we keep talking about the maturity of the Indian investors. We keep talking about the domestic flows have been rock solid. Are we getting a little too comfortable? Because if you dissect those flow numbers as well, you know, throws up various results. What's your view, Devina? 2007, 2008, that was when I started tracking markets. But you all would vividly remember that period. Tell us more.
Yeah, so let me go back even further. You gave that 1993 example. So yes, there was a lot of market movement around that time. But you must remember that from 1994, which interestingly is also the time that the FII flows into India started in earnest. There was a whole 9-year streak from 94 to 2003 when the net movement in the market was zero. I mean, it went up and it went down, but ultimately over 9 years, the index movement was zero, a whole 9 years. And this, I mean, for all the people who track flows, this is also important to remember that with this fresh slew of FII money coming in, no mutual fund market, to speak of in India, no, very little retail participation. Still, it didn't move the market. But this is the postscript to that is this, that after that 9 year of no net displacement from 2003 to 2007, the market went up 6 times, which was also part of a general emerging market move because the emerging market index itself went up 3.5 times, Brazil went up 10 times, and so on, at a time when US was struggling. So that was the move, that 2003 to 7, it was a 6 times move for the index. So yes, after that it fell. But then, this also gives you perspective as to how movements can happen. And as this is a statistic I've quoted earlier in my interviews also with you, that 2010 to 20 was again a period while, it's not as if there were zero returns, but there were very low returns. There were returns which were barely matching fixed deposit returns. So if you had put in 100 rupees at the beginning of the decade at 2010-11, you would have made only 230 rupees at the end of 10 years. As against 1980, you put in 100 rupees, that went to 700 rupees. So this was what created this subnormal return for a whole decade, just about, not even 9% at a time when fixed deposit rates were 8%. That created the room for this bull run, which is why I'm saying that for the large cap, for the mainstream indexes, I am still not negative on a sustained basis. There can be interim volatility, but I don't think we are at the high end. So, that 2007 and 93, there's a context to it. So 2007 was after a 6 times move in about 6 years. So
correct.
That was the context.
Okay. Devina, we'll just come back to you. You were making a very good point about some of these exchanges and, how they've been doing as well. The National Stock Exchange has revived its IPO plans and everyone has their eye on it. Nimesh, you have all the details?
Yes, so, Sonia, as you rightly pointed out, everybody is waiting for this NSE IPO. It's going to be a big mega blockbuster IPO as and when it happens. Of course, there are a lot of regulatory challenges to it. But this week, the board of NSE had actually asked, to file a fresh NOC. Certificate from regulator SEBI to file for a fresh IPO. Remember, in 2016 they tried, and it's still not been cleared by the regulator. So again, it's a as I said, it's a big event to track, and of course there is a lot of interest from retail investors as well. Interestingly, last quarter the exchange also announced a bonus in the ratio of 1:4. So again, that's still waiting the SEBI nod. Now IFL has put out an interesting note on NSE this week. And they believe that, the kind of speculative volume which has gone up in the options market, NSE faces a lot of uncertainty, largely from a regulatory point of view. So there has been a lot of consultation and there is an expectation that SEBI will come out with some regulations to control the speculation in the F&O market. Now, IFL believes that if there are stringent norms and stringent restrictions on the trading volumes, it can impact 1/3 of the NSE's volume, which would mean that the FY26 EPS can go down by 20 to 25%. So that's the kind of hit NSE can take in the near term if indeed that has to happen. Additionally, there was a recent announcement that regulator had asked NSE to provide further 2,600 crores in the guarantee fund. So that also can have an impact of close to 5% on the earnings as per the IFL note. But interestingly, I've heard only today there was a feedback that there is a fresh block on NSE at an average price of 5,300 rupees per share. So if you look at from a valuation point of view where NSE stands vis-a-vis the other exchange peers, NSE on FY26 price to earning is still quoting at close to 19 times, whereas BSE is already at 31, MCX is at 44, and IEX is trading at close to 40 times. So NSE is still very cheap compared to the other listed peers, largely because it's unlisted so far. But the other interesting thing, indeed, if it has to happen that NSE gets listed, of course, it has to get listed on the BSE. I just looked at some data on BSE 30. At the current price of 5,300, the market cap that NSE will come on will be close to 2.6 lakh crore. Right now, it would stand around 25th company in the BSE ranking. Interestingly, Nestle currently is having a market cap of close to 2.4 lakh crore. So if today, for example, NSE has to list, it will be above Nestle for sure as far as the market cap is concerned. So a lot of eyes are definitely on NSE's listing. Of course, there are a lot of regulatory headwinds and needs to check. But IFL believes that if there is a stringent regulator interferences, then the impact on the EPS earnings could be between 20 to 25%.
Okay. Devina, you want to comment on that? Of course, this is something that's long coming. I mean, there are a lot of regulatory issues as well that NSE has been facing. But as and when the listing happens, it's going to be big, especially for shareholders, right? Any thoughts on how to approach this one?
I haven't really studied the numbers, so I would not like to comment on that. As I told you, this whole category, our systems did not like, and partly the reason could be some amount of regulatory overhang, which might change the dynamics. And so I agree that this is a real risk, and as it should be. I mean, because the derivatives volumes, the way if you see over 5 years or 6 years, the way it has gone up, it doesn't make any sense. And obviously, everybody is losing money, which they refuse to recognize. And because human beings don't understand probability. So you're essentially playing a lottery, and you know for certain that the expected value of doing this is negative, but you think you will be the exception. So, I mean, those things are there. Overall, I would say in the IPO market, you know, India is a capital-starved economy. So any time any window of capital raising opens, then first the good guys come, and then a whole bunch comes, which is a mix of good, bad, and really ugly. So that's what's going on overall here. I see I'm not talking about the NSE IPO, obviously, but I'm saying IPOs in general, or even fundraising in general. I was looking at the QIP data. QIP raising this year in the first 6-7 months has been as much as what it was for the whole of last year, which itself was a huge jump over 2022. So anytime there's a capital available, Indian companies probably from the company point of view, rightly so, just go and raise money. I mean, when GDR market, which people have long forgotten, opened in the 90s, and so many Indian companies went there as global depository receipts, and I looked at the data, and I found that of the entire global GDR market, it was 90-95% Indian companies. So, that's the danger when there are too many companies raising money. I even hear some analysts saying that so-and-so is doing a QIP, which is a positive, and that's not the filter to look at, because QIPs typically mean dilution and return ratios, which is not to say that QIPs never make sense, but I'm just saying that there's too much fundraising going on overall.
Yes, Devina, exactly. That's why I wanted to ask the next question to you, especially in the real estate sector. As you rightly pointed out, there are a lot of companies which are raising funds, especially in the real estate names this week. In fact, today itself, we saw 2 companies raising money by QIP and pretty large sum. In fact, the entire real estate basket has raised money or in the pipeline of raising money. Your view on the real estate sector stocks, and is there in part of your portfolio right now?
No, they are not part of our portfolio, so which is why we are not looking at it very closely. It's a risky sector, and as a philosophy, as a house, and how we manage portfolios, we first try to avoid big risk. So this is not a sector that we have ever held in great size. And, given the nature of the sector, I mean, it's no wonder that people are raising money, because, that's the way to do it in this market, that money is available. So you may as well raise as much as possible. But also, I mean,
okay, all right.
This is not really, based on of data, but purely anecdotally,
I think there's some issue with your video, Devina. So I think we're just going to come back to you in a bit. We can't hear you very well. But this was another big week for block deals worth nearly 20,000 crore rupees. Nimesh, take us through the big ones.
So Sonia, the headline is second consecutive week of block deals worth 20,000 crores, or almost 18,000 crores this week, and we saw 20,000 crores last week as well. So, but the big headline for this week was, of course, the Indigo block. Kanwal sold, stake worth almost 11,000 crores by a block deal and still owns 13%. So that was one large block. PB Fintech, there was a large block, 1,600 crores. Welspun Living, the promoter sold and raised close to 900 crores. Nidlon was a large block today, but again, a small one though. But Mths was another large block of close to 850 crores this week. And a couple of other big names like Tata Technologies. There was a large block of close to 1,400 crores, and I believe there could be more blocks in Tata Technologies. So these were the large blocks of this week, but I guess the big standard was Indigo from this week. Even last week, we saw some large block deals, Zomato, Ambuja Cement, Kalyan Jewellers. That's a long list. So the big headline is for second consecutive week, we've seen large block deals, but my sense is it's not going to end here. In fact, for next week, there is a long list of lineup which has already been there. I highlighted about Paytm. There could be a potential large block deal. So because of this, so much of domestic liquidity, and there is a lot of selling happening from promoters and from PE investors also. Looks like this trend is going to only continue at least till the earnings season kicks in.
Okay, well, let's do one thing. Let's take a short break on that note. We'll be back with lots more market opinion with Devina on the other side. Stay tuned.